Another week, another trading cycles video. We are now in week 3 of the year 2024. Before we continue here, if you like the content that we create, then please click that like button if you haven't already. Also, get subscribed. Just hit the subscribe button and also the bell icon so you get notifications enabled for our YouTube uploads. That's all free. You don't need to pay anything to subscribe or like the video. If you have any questions or anything like that, you want to share something with us, leave that in the comment section down below. Also, another forward here before we continue. Do keep in mind that we do not provide financial advice here. All the content that we share is intended for educational purposes only. Always trade to price and not to prediction. My name, as always, is Eric, and I'm here with Urmas, and we're going to discuss what happened this past week on the financial markets and what we expect might happen this upcoming week as well. So, yeah, I'm going to hand over the word over to Urmas. Hey, Urmas.
Oh, hello, Eric, and hello to our listeners as well. Good to be back, and we had quite exciting week. It did go up, and that's always a good sign.
Mm-hmm.
So we did see quite interesting price action. It did break to the downside in midweek, but it did recover by Friday, and overall it was a win. Now, before we look into the rest of the stuff we usually do here, let's go through a couple of things that I have obviously noticed and I want to point out now. Yeah. So obviously it's not always easy to spot the opportunities, and as we are dealing with our everyday topics, sometimes we just don't notice them on time. But there are some indicators that will allow us to do so. Now, obviously, we are talking about legal ones, yeah, not illegal ones. So we want to be on the safe side. But let's imagine that you are going on a nice flight, you're going on holiday, and you're all excited there, and obviously the plane has taken off already, and then suddenly you sit on the row 28 there on the CT, and then you notice that oops, suddenly the window has blown off. Not the best situation to be in. Yeah, as happened last week on Boeing 737 flight, and obviously that was for Alaska Airlines. Yeah. Now, obviously, in this situation, what would you do? Would you take your noise cancelling headphones off and start panicking, or would you take your phone, open your broker account, and obviously short Boeing in that situation? highly doubt that you're going to do that. Yes, obviously you would be trying to survive, although there's not much you can do about it. So you can grab the mask and obviously sit tight there, yeah, and wait what's going to happen. Now, that is usual behavior, so you can't really think in those situations because you are scared, yeah. And obviously it happens quite a lot on financial markets. Then when you come to those situations, not as dramatic but obviously if the market is falling, then you don't feel comfortable obviously going long on these situations when everyone else is selling, and obviously the opposite is true. When the market is rising, prices are going up, everyone is happy about it, you wouldn't want to sell your stuff, yeah, so you want to hold on to it, okay. And these are quite tough decisions to make, obviously, and that's what we mainly struggle with our psychology. It comes from thousands of years ago when we had to really survive and be afraid of things that might be out of our control. But nowadays, obviously, on financial markets, they do tend to obviously mess around with us, yeah. So we tend to lose money because of those behaviors. Now, there are some legal ways, obviously when you sit in that Boeing, would you think that you would be like an insider when you short Boeing? No, you just happen to have in the right place in the right time, or not really.
Maybe not.
So,
maybe not on the right way.
but you are close to the actual information source. Yeah, let's put it that way. Okay. Now, it's not illegal, but illegal it would be if you use insider information. Now, we can use some insider information. We can use the data that is widely available to us, what insiders have been doing on the market. Yeah. And that is obviously publicly available. We can see whether broad majority of insiders have been selling or rather buying. Yeah, what usually happens, they tend to sell more than they buy. Yeah, there are obviously several reasons, but that's not our concern at the moment. Idea is that it's not so easy to spot whether the buying decision was made because of what's going on in the company, or is it just a personal reason. Now, when insiders are buying, that's obviously quite a good indicator that they have quite good, strong belief that the company will do better in future. Yeah, okay. Otherwise, they wouldn't put their own money in there, most probably. So obviously, that's a better indication. And now, when we look at those lines here, the red line is the insider selling activity on the US market for the last year, and obviously the blue is the buying activity. And they were quite good indications, like when in March last year, when we had the banking crisis, insiders suddenly started buying quite heavily. And what happened afterwards, obviously market did go up. Okay, same activity took place in May. Again, we had very strong summer. Okay. And also in August, we had something similar. And also in the end of October, the insider buying activity started obviously to go up. And we had very, very strong year-end rally, as we all remember. Yeah. So these are very good indications, obviously, to understand where the broad market might be moving. Not always ideal, but it will give you an idea, as with any tools we use in our trading or investment decisions. It's not always 100%. We are dealing with probabilities, and we are trying to put those probabilities to work for us. Yeah. All right. So that's what I wanted to point out. Yeah. And always good to keep an eye what the insiders are doing, as they are quite close to what actually is going on. So we call it the smart money. Okay. Now it's all about the perspective as well. Yeah. So obviously in those weekly overviews, we have been looking at what's been going on a weekly basis. On the first week's video, we did cover longer term cycles as well. But there are some mid-term cycles that we need to obviously take into account as well to make our mid-range decisions to the right direction as well. Okay. So that's what we are trying to keep now in mind in these videos as well, and keep you posted. Now, a couple of things, obviously, where the broad market is or has been in recent years. There are a couple of things to bear in mind. Now, as we have seen, Dow Jones did make new highs now recently. Same happened with Nasdaq. S&P is struggling at the moment, but it's forming a double top at this point. Now, what Russell 2000, which is small cap or broad market, as we put it, has been doing is it's been struggling for the past 2 years, basically. And it hasn't really picked up there. And as we see, if we compare those two, Dow Jones and Russell 2000, the trend has clearly been down. Okay, so it's been declining. Same goes for Nasdaq, so technology sector itself. When we compare Nasdaq 100, which are 100 biggest companies there in the index, and we compare Nasdaq Composite, which is the whole Nasdaq, then we can see the same trend, basically. So it's been very negative correlation there. So the top is obviously leading and broad market is lagging. Okay, so therefore the trend is down. So, and if you look at overall picture globally, then this Magnificent Seven that led the way last year, by market capitalization, it's bigger than most of the nations' stock markets altogether. So basically China, Japan, Hong Kong, India, France, UK even, are fairly small compared to that Magnificent Seven market cap. And that first line is obviously US stock market total, yeah. So that is very big chunk of that as well. Okay. So it is very tilted, and I did point out in my previous work in 2022, I believe I said that it's time to start choosing what you are buying, because the time when everything turns to gold is over, and it has been quite true since then. Okay. Now, how do we spot those things? Then obviously we want to be with the winners, and we want to keep what is holding the trend. So one very basic tool that we use is moving averages, yeah, basically, and we have our model that tends to show the trend fairly good, yeah. So it does not give so many false signals, and that's what we want really. We want a steady trend, and we want to go with the trend, yeah. And obviously that's where moving averages are very good. They will filter out that noise, and when we combine it with some other tools, that's even better, yeah. So obviously that's something to keep in mind, and to use the right tools the right way. Now let's go into the weekly topics then. So basically what happened last week? Last week did obviously end that short-term sell-off. It did go back to its previous levels. Basically all of them, Nasdaq, Russel, S&P 500, they were all heading back up. There were a couple of obviously earning reports, because the earning season has started now. So the banks were the ones in focus mainly, as they do report in a first row there. It was a bit mixed, and it wasn't so good, to be honest, yeah. As JP Morgan did fail quite a bit there, and same was true, I think, for Bank of America. Yeah? And this coming week we have now more financial institutions reporting there, so we need to keep an eye what the sentiment is going to be after that. Yeah, so it's not as good as it was expected. And also what else we had there? Yeah, nothing else really to point out. So that's all there was. Oh yeah, there was one good news for crypto world. Obviously, finally the crypto ETFs were approved, and then that's obviously gonna bring the opportunity to trade those instruments to a broader market, which might be a good thing. Yeah, hopefully it is. So we're going to look into the Bitcoin trends now shortly, but yeah, these are the ETFs that can be now traded on stock exchanges as well. Yeah, so something to note if you weren't aware. Okay. Now actual price movement was, as I said, very positive. The trend was to the upside. As we see, there hasn't been any reds in that week on an hourly chart, so that was all positive, and we did trade some of it as well, so that went quite positively as well. Now, what is going on broadly is that we have been on this oversold territory already for quite a while, quite many weeks, and it has started now to decline. So that is a warning sign that the markets might correct now soon. So that's why we are a bit cautious now, because markets tend to have those correction phases, obviously, and that's quite normal. We don't say that it's going to be now a massive sell-off, but it's just a normal correction. We do still expect that this year will be a positive year, but there will be obviously ups and downs, yeah. So it's not going to go up all the way, and it might not be a strong year as previous year was. Okay. And the same goes for 200-day moving average. So that will start now correcting as well, I believe, yeah. So last week was a bit lower now as well. Okay. VIX index, I did turn it upside down here, so it is more, how to say, more graphic in this way. Now, what I wanted to point out with that is that in the last cycle, we did see a breakout of that pattern, and we know that when VIX is on its lows, so that well, obviously on its highs on this chart, but then it tends to break out quite heavily at some points when the panic arrives to the market. Now, in recent years, we haven't seen very much panic at all. Yeah, so it's been quite steady movement, ups and downs, but VIX has been quite stable. Now, as it is on that top level there, or on its lows actually, obviously at some point it will have to break out. I'm not saying that it's going to happen now, but from that triangle, yes, it tends to break out. So we just have to bear that in mind as well. Yeah, when it happens, then it's going to be quite interesting to see if it's going to be quite aggressive panic as it was last time, or is it going to be just another slow panic, so to say. Yeah? Okay. Now, what else? Technically, yes, we are still trying to break through that resistance here on the S&P, so that 2022 January top is still holding, and it's very strong, and market did touch it, went back, touched it again, then declined, now touched it again last week. So it keeps trying, but obviously hasn't succeeded. And as other indications are obviously to the downside, so the market seems to be overbought. So I think we might see another leg down before we break through that resistance. Yeah. Okay. So that's what we are anticipating at this point. Now there is another cycle in play as well, which has been holding true for quite some time already on US markets. It is 17-week cycle. Obviously, it fits about 3 times into a year, so that's a part of bigger cycle, but it tends to work quite well. So at the moment, as we can see, we are about to start declining on this cycle as well. Yeah. So we might see a bottom of this cycle around end of February or March, and thereafter it should go up again for most of the year. Yeah, but there will be obviously ups and downs as well. Okay. So that's what we are anticipating. So the February possible correction might be the biggest one this year so far. Yeah. Okay. So something again to keep in mind. Now, sector performance was quite good. Obviously, there are 2 sectors leading, so technology and communication. And the worst ones were materials, utilities, and energy. And on the heat map, it's basically shown here by companies as well. So technology and communication were all in green, and then energy here, utilities and basic materials were all red, basically. Yeah? Okay. Then fear and greed still stays on greed. It did touch extreme greed again during the week, but now it's back to greed by the end of the week. Yeah. Seasonally, we are still in that upward movement, although you can see that in March there is seasonal tendency as well to decline. Yeah. Okay. And statistically, yes, there are some ups and downs as well this week coming up, so that's something to be aware of. Although for the past 12 years, the trend has been fairly good to the upside. Yeah, so 10 out of 12 have been rising years in this time. Okay. Now, if you look a bit further here, so end of February will be quite weak. And March has been quite weak as well, yeah, as we saw there on seasonal as well, yeah. So that's something to bear in mind. Now, Astro calendar is pointing out a couple of aspects here. So most of the week is quite okay. The Friday is the most negative, I would say, yeah. So that's not ideal. And obviously on Sunday, Pluto will change signs again and will enter Aquarius again, as it did last year from March till June, where we saw that AI boom to begin, and obviously that led the technology sector leaders throughout the year. Yeah? So we expect some news or some movements now in that sector as well, and also in other technological advancements or other companies that might start sticking out at some point. Yeah. Okay. Aspects wise, so Monday we will leave out because it's most of the market is closed. Tuesday is rather red. Wednesday, Thursday are quite green days, and Friday is red again. Yeah. Okay. And now that's about it, I think. So what to expect then from the new year? So basically, bank earnings. Yeah, that's the main focus, and some consumer health and financial sector news as well. Now we do expect to see some inflation numbers, so that's something to keep an eye on. Then Goldman Sachs and Charles Schwab are amongst the biggest banks who report earnings, and we will have a WEF in Davos as well. So basically, that's something to watch closely as well. What the world leaders will talk about, and obviously what they decide, we might not know so exactly, but we will hear some topics there. The event has been titled this time "Rebuilding Trust." Okay, so there will be some important leaders, obviously, attending as well, and they will discuss range of topics from geopolitical conflicts to trade and debt concerns. Okay. Now, China's GDP numbers are coming up on Wednesday. That's also important. And Germany's GDP is coming out, and UK is also releasing inflation data. So these are obviously all important topics to bear in mind. And oil markets are something we need to focus on as well because of US and British strikes on Houthi targets in Yemen. So Red Sea area is obviously adding some volatility to the oil market at the moment. Yeah, as they are targeting those ships there as well. Yeah, or rerouting them at least. Okay. Now there are the numbers that or dates and times to keep an eye on important macro events. So let's look at the charts as well quickly. Yeah, so before we wrap it all up, so basically on S&P, the turning points that are important. So and the next one is coming up on Tuesday on the 16th, and thereafter it's on 19th on Friday. Okay, so these are quite important days. And then on gold, it's gonna be well, I think it's gonna be market moving to the upside. Yeah, we did point out that it starts to turn now. So yeah, it did actually on Thursday last week, or was it Wednesday? No, Thursday. Yeah. So we do expect that this price will continue to the upside again. Yeah. Okay. And then Bitcoin. Bitcoin might have obviously reached its top for this current cycle. I'm not talking about long term. I'm talking about short term at the moment. So there might be another correction phase coming in, but we do expect this market to go to the upside in the next coming months and maybe possibly years. Yeah, so that's obviously something to keep an eye on. So the declines tend to be quite sharp and obviously sometimes more than 40%. So you need to be aware that this is a volatile market, but yeah, this is quite inevitable. So they do tend to correct. Nothing we can do about it. It can't go up all the time. Okay. So that's that. And what else we got here? That's about it, I think. Yeah. Now, when we look at that, one stock that we started following cyclically, yeah. So that's what I wanted to point out. WTW, yeah. So in this stock, we did notice that obviously it's quite cyclical, and it tends to now go up until end of January. Yeah? And what has happened here, if I go to that on a daily, so it did go up for the past week. Yeah, it started already. Okay, so we're just keeping an eye on it. So just to see if the cycles are working for this market, and at the moment, yes, it tends to be working quite well. Yeah. All right. That's about it, I think. Yeah, let's wait and see. So we don't point out any stocks at the moment, as the market is close to the resistance, and we just have to wait if it's going to correct at the moment. Yeah. Okay.
All right. Thank you very much as always, Urmas, and thank you for watching and listening. If you haven't already, click that subscribe button. Also hit the bell notification icon so you get notified when we upload next. If you like the content that we share, please click the like button. And also, if you have any questions or recommendations, those go in the comment section down below. Check out our website. Link is going to be in the description for you to follow and access. And that's about it. We shall wait and see, I guess, what the next week brings us. And yeah, I wish you all a really nice week ahead. Thank you. Bye-bye.
Yeah, have a good week, and we'll see you next time.